Hello everyone and welcome back to another video from Kotak Securities. It's the weekend and today we'll be looking at the currency insights, what has happened and what has happened during the week in the currencies, and we'll also take a look at what are the factors that will be affecting the currency movement in the coming week. So let's get started. So first off, what the weekly currency performance has been in the past week. So if you can see, most of the currencies, most of the pairs have been positive, and the least positive is the JPY INR. The highest positive is the GBP INR. So if you see from the smallest to the highest, so JPY INR has moved up by about 0.72%. The USD INR moved up by 1.02%. The Euro INR by 1.01% and the GBP INR by a staggering 1.5%. So let us take a look currency-wise what has happened in the previous week. So just to give you a broad picture, the markets recently have been very fragile. And if you see, the dollar has been reacting more to the sentiments. अगर आप ऑब्जर्व करो तो मार्केट काफी फ्रेजाइल सिचुएशन में है. थोड़ा सा भी जब सेंटिमेंट चेंज हो जाता है, मार्केट इमीडिएटली ब्रिस्क मूव्स देता है. Now, to add to the problems, last week we had hawkish comments coming in from the Fed members. Now that put the market in a risk of mood. So there was a massive flight of capital from the riskier assets to dollar-denominated safe haven. And then to top it off, we had the OPEC Plus meeting. And in that meeting, the OPEC Plus members actually proposed a 2 million barrels a day production cut. Now, all these three things together put a lot of pressure on the other currencies, and that is why we saw the up move in the dollar. Now, to understand the magnitude, now this I'm showing you the chart, and this is the chart of the USDINR. Now, this is the daily chart. So, if you can see, for the past couple of days, we had been moving in a range, and on Thursday there was a range breakout. And if you see, the range came in near somewhere near the 82 mark, and on Thursday, we saw a massive sell-off in the rupee, or probably I would say a massive demand in the dollar. So because of which the dollar-rupee pair moved up, and even on Friday, it continued the trend of going higher. Now, one might think as to why this has happened. So if somebody has been actively tracking the market, the participants have been looking at cues and hints of what the Fed's next move is going to be in every possible economic data. And the Fed members coming in and preparing the market for a hawkish stance actually led to buying orders. Led to buying in the dollar. So because of which most of the other currencies depreciated against the dollar. So if you see the Euro INR, that also had a good week, and for the past couple of weeks, it had been moving higher to such an extent that many people were telling that the Euro USD would actually hit the parity level. But that did not go well. It missed the parity level by a whisker, but nonetheless, it has moved lower a bit. So Euro INR, there were no massive drivers for the Euro. Bear that in mind. It was actually dangling around what the price action in the dollar majorly was. Next is the JPY INR. Now, the major thing that happened in the JPY INR was the policy U-turn. Now, if you remember, a couple of weeks back, the new Liz government actually came out with a mini budget and the tax cut policy. The market did not like it. The immediate response was a massive sell-off in the UK gilts. And last week, they came out and told they took a U-turn. They decided not to go ahead with that policy. And that actually lightened the mood a bit for the GBP INR pair. Now, what did not go well for the GBP INR, or probably what stalled the up move in the GBP INR, was the risk of mood that was created by the Fed members coming in and telling that they were coming in and telling and preparing the market for a hawkish move. So if you look at the chart, the up move stalled somewhere slightly shy of 94 level. Now, bear in mind, these are spot charts. So it stalled somewhere near the 94 level. And from there, we had seen a down move. Now, what happened in the JPY INR? So if you remember a couple of weeks back, when the USD JPY pair moved up to about 145 or slightly above that, the BOJ, the Japanese officials came in and intervened. Now, that was a stealth intervention, and that gave a good boost to the yen, or we saw that result in the JPY-INR pair as well. Once the dust settled around that, people again started following or probably focusing on the policy divergence between the BOJ and the Fed. Now, what is policy divergence? Especially, I'll explain to you with reference to this case. So, the Fed, as you know, has been hawkish. They are continuously increasing the rate by 75 basis point. On the other hand, the Japanese yen or the BOJ, the Bank of Japan, has been maintaining an ultra loose policy. So invariably, when this thing happens, and what happens is the money actually starts flowing to the higher yielding currency, and in this case, it is the dollar, from the lower yielding currency, that is the yen. So basically, there is a capital flight from the yen to the dollar because the dollar is yielding higher and the yen is yielding lower. So that is why we see this major, capital flight from the yen. And secondly, after the dust around the intervention had settled, the yen actually started moving in tandem with the US 10-year bond yields. So what has happened in the yen? So broadly, yen was range bound, but if you can see on the charts, it has bounced back a fair bit in the last 3 candles. So that is something significant to keep in mind. Now, currency is going ahead. As I told you, the market participants at the moment are looking at every possible cues to understand what the Fed's next move is going to be. So one of the factor that the people look at is the CPI data or the inflation data. So a higher CPI would mean that the Fed is actually going to increase the rate. A CPI print a notch below the expectation, or not a notch below the expectation, fairly below the expectation, or slightly below the previous print, would actually mean that the Fed's effort, the Fed's continuous rate hikes have actually kicked in, and the inflation is coming under control. Now, again, I'm just touch basing on that fact that inflation is coming under control. This is just to pass on the message a bit, but broadly, if the CPI data is lower than expected, we can expect some spike up in the volatility, or the market participants, thinking that the Fed's pace of tightening will come down. Similarly, with the FOMC meeting minutes, the participants will be looking for cues and hints as to what the Fed's next move is going to be. So, in the coming week, these 2 factors are the most important things that are expected to spike up the volatility in most of the currencies. So that's all for the currency insights today. Thank you for tuning in. See you all in the next video. Till then, stay safe, trade safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.